right, if you guys want about over 500 pages of advice, investment advice, more or less, from basically the father of value investing. And obviously when I say investment advice, for that usual disclaimer you have, it's not like specific, this is what you need to invest in. It's like investment advice in terms of, you know, how you have to think about things and kind of more investing principles, we'll say, and kind of like, you know, having a fundamental foundation for how you should think about investing, especially value investing, and going from there. So where I'm going with that is The Intelligent Investor by Benjamin Graham, which is basically has been known as the stock market Bible since it was published in 1949, right? And so one of the big things about Benjamin Graham is, again, he's known as the father of value investing, and I'm pretty sure he was the mentor to Warren Buffett. But in the field, he's kind of known as one of the greats, right? One of the GOATs, if you will, if you get that analogy. One thing he talks about is the difference. You have to know the difference between investment and speculation, because there is a difference, especially in psychology, and you treat them differently. And it's not that one is necessarily better than the other. It's that you have to know which one you're doing, because you can't switch between the two. And that's when you basically lose your shirt. So if you're going to invest, you invest for the long term. If you're going to speculate, do it accordingly, right? And don't mesh the two, because that's where a lot of, it seems, at least how it's been described to me, is where a lot of immature investors really mess up. To pull some quotes, so comparatively little will be said here about the technique of analyzing securities. Talking about this book, attention will be paid chiefly to investment principles and the investor's attitudes. So kind of more of the principles you use in your whole investment thesis, and then also kind of a little bit more on your psychology of how you want to do this, and you want to be aware of that. Right? If you want to do actual more like analyzing securities and that sort of thing, that's in his boat anchor of a book, Securities Analysis, which is like 800 or 900 pages. I'll do a video on that one as well in the future. But that one was a good one as well. Okay. Another big thing you have to know is the difference between a defensive or passive investor and then an active or enterprising investor, as he says. So to kind of define those terms, he says the defensive or passive investor will place his chief emphasis on the avoidance of serious mistakes or losses, right? It's basically, you're trying not to lose money. Defensive. That one's not all too difficult to understand, right? Now, on the other hand, the enterprising or active/aggressive investor is basically defined by his willingness to devote time and care to the selection of securities that are both sound and more attractive than average, to use his own words to define the terms, right? And so one thing to keep in mind is from his point of view, the investor's chief problem, right, and even his worst enemy is likely to be himself, right? Again, to use his own words. It's mostly psychology, it seems, especially if you follow kind of a general principled format, right? And so, in saying that, one of the reasons why you should read the book, and it's a bigger book, it's got a lot of small print and can get kind of technical. He gives lots of examples, which is really helpful. Things like that. It's very, well, no one cares about your money more than you do, right? And that's one thing I've said for a while. You hear it repeated a lot, it seems, in the space, just because, I mean, it's true. If you give it to an investment advisor, they're not going to try to take as much care of it as you are, right? Even though you're paying them, it's not as valuable to them as it is to you, because they weren't the ones who were physically grinding for it, right? Or whatever you happen to do for a living, right? And so again, he gives historical examples, explanations on how to become an intelligent investor, hence the name of the book, and basically thrive no matter what the outcome is, in terms of like what actually happens in markets and that sort of thing, right? And so, yes, it's a bit bigger. I got a version that has a lot of commentary by someone named Jason Zweig. I'm assuming he has kind of a dramatic name, which is why I pronounce it that way. But it has a lot of stuff in here, like different portfolio policies, again, defining defensive investors, the differences between investing in common stock, and the other forms of equities in general. It also goes into bonds a bit, comparing listed companies and how you should think about that, stock selection and how you should think about that. Again, not necessarily like actual metrics and stuff. That's more the realm of his book, Securities Analysis. This is more of like when you're selecting stocks, this is how you should think about it. It's more of kind of the psychological side of things in general. He gives case studies, same thing in terms of the psychology, speculation. There's a lot to it. There's commentary from Jason Zweig, which forgot a little bit more about him. So basically he's a journalist, it seems, for the Wall Street Journal. He's written for Money Magazine, guest columnist at Times, senior editor at Forbes, and basically he's been writing about investing since 1987. So he's been following it for quite a bit. And it seemed overall his commentary was pretty decent, especially yes, he has his own opinions in there, but of course he wrote it. But the reason I say it's decent is because it really reflects on what Graham wrote himself, right? So it's not like something completely auxiliary to it. It really meshes well with the actual book itself. So it's not just like random commentary. But anyways, again, here is the cover of the book, and I'll put a link to it and everything in the description so you guys can find the book yourself. Highly recommended. It's known, or at least the reason I picked it up was because it was, again, kind of noted as the stock market Bible. It's kind of known as like it's one of the fundamental books you need to read before you really start kind of investing yourself, it seems. It's very helpful. I'd say it's probably very foundational in at least how I've put up my own investment portfolios and that sort of thing. Like just flipping to a random page, it talks about like you have to keep in mind like brokerage costs, the cost of actually owning certain things depending on what that is. I know depending on what certain companies file, you have to do certain tax things, and again, it really depends depending on their corporate structure. There's a lot of nuances to it. And so I don't know, I wouldn't say that sort of thing is going to be in here specifically, because that can change on a yearly basis, depending on what it is, and keeping that general. But it's at least how you should think about it and whether or not you want to actually deal with stuff like that. But anyways, I'm going to leave this one here. So again, put the card to the previous video and a playlist to other book reviews in general. So hope to see you guys there.